Holy smokes, guys. I just realized I was recording for 20 minutes and I wasn't even live. Sorry about that. Okay, we are live now. Okay, so yeah, I was literally talking for 20 minutes, thinking I was live, and then I realized I was not live. So, yeah, sorry about that, guys. We are live now, though. So, at least, yeah, I guess you can say that was a practice run. I'm still getting used to this live streaming technology. Alrighty, so yeah, again, guys, apologize. I was here. I've been talking for about 20 minutes, but unfortunately, it was not live. So yeah, sorry about that. So yeah, we got lots of news to cover, everyone. We've got lots to go on about the markets. So yeah, let's not waste any time. Let's get straight into it. So first things first, let's have a look what's happening in the pre-market. So the market is slowly trending down to where it was earlier in the pre-market. The Dow's pretty much flat. The S&P is just up 0.6%, and the Nasdaq's up 1.15%. Let's have a look what else is happening. Oil is up about 0.6% for Brent crude. It's at 89 and oil's at 88. We'll have a look what's gold and silver doing. Gold's pretty much flat, still at 1,800, and silver at $22.69, up 0.3%. Bonds pretty much still flat at 1.8%. And Bitcoin's down slightly, down to 38,300. So yeah, I better check, make sure. Can you guys hear me? So we're all good now. We'll go ahead and get into some other news here. Yeah, awesome. So also something we're seeing continue to happen here is the DXY, the US dollar index. That's been continuing to fall and fall. We saw that it was rallying the past month. That's what I've been talking about. The reason why also asset prices have been falling is because the dollar has been going up, but now it's starting to fall down, and that's why we're starting to see asset prices go up. So awesome. It's good. I don't want to record another 20 minutes and find out I wasn't live again. So yeah, so that's what's happening in the dollar. Dollar going down, bullish for assets, especially commodities. So let's get into some news here, everyone. We've got definitely a lot of news here to cover. Look what happened here this morning, everyone. PayPal shares have plunged 17% as bleak forecasts stroke growth fears. So PayPal, they're getting hit by some of the issues we've been talking about. So the shares slide set for the stock up for its lowest opening since May 2020, as PayPal also listed out a number of other factors hurting its performance, including this is what we've been talking about, everyone. This is what's hurting their performance: high inflation, the end of stimulus checks. So a lot of companies' earnings have been pretty good for Q4, but remember, that's still 2021. I've been talking about, I don't think their earnings are going to be anywhere near as good in 2022 with the end of stimulus. And this is now a part of the factor that's hurting PayPal. The impact of ongoing supply chain issues. So again, some companies are getting hurt more than others with the supply chains, but it's still definitely playing a big factor on companies' earnings, and that's going to affect stock prices, and also on cross-border volumes. So that's what's going on with PayPal. That's the reason why their stock's falling at the moment. Let's get into some other news here. Let's have a look to see what some stocks are doing in the pre-market here. So let's go here by market cap. Let's go into some of the large caps. So yeah, not many big losers, say, in the large caps. This down 0.5% or so. We can see PayPal's actually down more now, down 19% in the pre-market. We'll have a look what else is happening here. Yeah, not much too else going on here. Netflix down 1.3%, so kind of getting hit a bit there. We'll go back here. Let's go into the 5 things to we should be looking at this morning, what CNBC says we should be watching out for. So see here, NASDAQ futures were up 1.5% as Google parent Alphabet surges. And the reason for that is because what happened is they came out with the earnings, and yes, it was better than expected, but the share price didn't really skyrocket until they announced they're going to be doing a 20-to-1 stock split. So what that simply does is it's more psychological. It drops the stock price from around $3,000 down to around roughly $130. Investors think it's cheaper, or investors may want to own a full share instead of a partial share. So you may have some retail traders that look at a stock, they see it's $3,000, and they go, look, it's too expensive, I'm not even going to bother investing in it, because they want to own full shares. Well, now with Google announcing they'll do 20-to-1, it will make it easier for investors to own a full share in Google. And so that's what's really causing the stock to surge today. It's speculation, not so much about the earnings, which were good, which contributed a bit to it, but that's not the full story. Let's see what else is happening. So Meta platform Facebook rose 3% in the pre-market, but I think they're trending down now. I'm just talking about the S&P and the NASDAQ, which we've already gone over. But this is something we've got to talk about, everyone. This was some huge news that we got today. So companies unexpectedly cut 301,000 jobs in January as Omicron slams the jobs market. So this was a massive, massive miss. You know, Jerome Powell's been saying, you know, the labor market's so strong, the economy's booming, but now we're definitely seeing a big turn, and I think the economy's about to make an even steeper turn. And that's why, even though companies' earnings have been good for Q4 last year in 2021, I think it's definitely going to be different for Q1 in 2022. So let's have a look here. Private payrolls fell 301,000 for January. Look at this, versus the estimate for a 200,000 gain. So they were expecting 200,000 jobs to be created. They were expecting growth, but instead we got a $300,000 job loss. So what do you think about this, everyone? So this was the first reported net job loss since December 2020, and came as surging Omicron cases is hitting hiring. So the pandemic-sensitive leisure and hospitality industry was hit hardest again, with 154,000 jobs lost. So again, I think this is what could be contributing to the labor shortages, because who would want to take up, you know, one of these jobs when there's just so much uncertainty with, you know, you get a job and then the next month all of a sudden you could be fired with what's going on with the pandemic. So yeah, 2 minutes till the market opens. We'll go ahead and we'll probably switch over to Bloomberg when the market opens. So we'll have a deeper look here with what's really going on in the jobs market. So trade, transportation, utilities cut 62,000 jobs, while other service category declined by 23,000. Manufacturing lost 21,000 positions, while education, health services reported a drawdown of 15,000, and construction fell by 10,000. So service providing industries were responsible for 274,000 of the job losses, with goods producers falling by 27,000. So is this a sign where we're seeing everyone, where we've been talking about a possible recession in mid to late 2022? Could this be the beginning? And again, with no more stimulus checks, with interest rates about to go up, quantitative tightening, could this be the perfect storm? This I'm off work driving in the Freedom Convoy, baby, Hong Kong. Yeah, good on you, mate. Yeah, definitely support what's going on there with the truckers. It's good work. Alrighty, so what else is going on here? So yeah, that's pretty much what's happening in the jobs market. Let's see, what is Bloomberg saying?
For you personally, what are the big goals there for you?
Well, again, I think business, when we look at the transformation that's happening in almost every industry, I think business working together and also being a partner to move the country forward is very important. So I'm very proud of my BRT role and representing companies as we look to move to the future and really create a stronger country. So a really important opportunity, and the work that BRT does is so important, so I'm honored to be able to have the opportunity to lead them.
And we're honored to have you with us this morning. Thank you for being with us. Looking forward to catching up through the year ahead. The General Motors Chair and CEO, Mary Barra. Looking ahead to the opening bell, this is the situation for you about a minute out. There's a big lift in this equity market. On the chip supplier side of the story, GM giving you some hope for the year ahead. For Alphabet, just the cyclical appetite for ad revenue, for ad spend seems to be absolutely fantastic.
Futures are down a bit
ad revenue there
from where
up
they
by
were.
more than 30% for the quarter in Google. That's giving the Nasdaq 100 a major lift here, up by 171, up by a little more than 1% on the Nasdaq futures. On a Russell, up by just 0.04%. On the S&P 500 futures, they're positive a 0.5%. If you switch up the board and get to the bond market, here's a story for you going into payrolls. Ahead of payrolls, we could get a negative number after what we've seen on the ADP report. Treasuries settle down at the moment at 179, 178.76. Yields going nowhere. Euro dollar one to watch. Inflation in with a 5 handle. We did not expect that. The ECB coming tomorrow. Full coverage here, of course, on this program. Euro dollar 113.18 and crude up by 50 cents, up 0.6% to 88.74. That is the cross-asset price action. The downgrade starting pretty early this year. Ed Yardeni, the first one out of the gate, trimming his S&P 500 price target to 4,800 from 52, writing, quote, Chair Powell and his colleagues have been making the tough transition more painful. My message to the committee, the labour market is strong. Inflation is a problem. Can we just get on with what needs to be done, please? Chris, I want to bring you back in. You raised the point, what needs to be done.
Bloomberg for the opening bell. So something there, though, we are getting now, though, is the jobs market isn't looking that strong with this $300,000 job loss. So could this mean that the Federal Reserve's about to flip everyone? And this could this be why the markets have been rallying this time? I'm sure the Federal Reserve is going to look at this as an excuse not to lift interest rates as much as they expected. They're still probably going to have to do at least 1 rate hike or 2 rate hikes to keep their credibility, but things can change so quickly in these markets. We'll have to keep watching what's going on. So let's see, what is it saying now? So it's trending down, everyone. So the Dow's just up 0.09%. The S&P's trading down to 0.4%. The Nasdaq's just up now 0.6%. So remember, it was up about 1.5% in the futures. Okay, let's see. Thanks for that, for supporting there. Let's see. I'm not going to be able to pronounce that properly. Pekala, I think. You have to tell me how to pronounce that. Okay, yeah, S&P 500 gains 4th day. Will it hold, everyone? Or was that just a dead cat bounce? We're going to head back down again today. Again, this is all Alphabet that's lifting the indexes with their 20-to-1 stock split because they are one of the large caps. So let's see, any juicy information in here? Nope, just pretty much talking about Facebook, Alphabet, the jobs report, which we already went into, Meta. Okay, so talking about earnings season. So again, good earnings season, but again, that's the rearview mirror, what's going to be happening in the future. Let's get into some more news. We do have a lot of news to cover here. Look at this, everyone. So we got this news as well with the inflation crisis that's going on around the world. So Eurozone inflation has just hit another record. This is piling pressure on the European Central Bank. And so the European Central Bank has probably been one of the dovish central banks out of all of them. Same with the RBA, but with the RBA, the official CPI number is only about 3.5%. PayPal, yeah, I went over PayPal. I'll get into that in a moment. I think that was down 19% in the pre-market. So yeah, we've been seeing this with European Central Bank. Even though inflation is getting higher and higher, they're still not doing anything. So look at this. The cost of living for the 16 nations that share the euro currency rose 5.1% in January. So inflation is still trending upwards, despite the expectations for a sharp drop to 4.4%. So December figures had come in at 5%. So holy smokes! Thanks for that, Christopher, for that super chat. So this is what we've been seeing. We've been seeing Lagarde, continue to say, nah, it's just transitory. She's been all these central banks have been trying to play the same playbook as Jerome Powell. But we all know that it's not transitory. And I don't know what they're really waiting for. They're all trying to keep the bubble going as long as they can, because they all know as soon as they start lifting interest rates to what they actually need to be to fight inflation. Because remember, if inflation, for example, like the Fed is 7%, and they lift interest rates to 3%, well, then that's still effectively, if inflation does stay at 7%, a negative yield, a negative interest rate. So normally, like what Paul Volcker did in the 70s and in the 80s, they had to lift the interest rate up to meet inflation to really bring it down. But there's no way they're going to want to do that, or there's no way they have the will to do that, because we all know what's going to happen if they really did that. They would see the biggest debt crisis we've ever seen in history, everyone. Okay, so let's see what else. Let's go a bit deeper into this report. Yep, so it's pretty much repeat what they said in the headline here. So another key question, I'll just have a sip of water here, will be how independent monetary policy can be set in the region at a time when banks like the US Federal Reserve are entering a forceful tightening cycle. So inflation continues to rise to the upside. The US Fed looks set to raise rates up to 6 times this year. But let's see if they do that now. Okay, so against this backdrop, the debate at the European Central Bank will likely become even more controversial than before. So on Thursday, the market will watch whether ECB President Christine Lagarde will come out with changes to previous statements that a rate hike is very unlikely in 2022. So yeah, she's definitely probably not going to be able to hold up that statement now that it's continuing to go higher and higher. Or whether there'll be a tweak in the ECB's assessment over the transient nature of the current spike. There's also the issues going on with Russia and Ukraine as well. So yeah, we're just seeing this inflation crisis get worse, but the central banks, they don't really want to do anything about it. They're trying to keep this bubble going as long as they can. And this is why, I've been calling for a correction in the markets, but if the central banks aren't going to actually do their job, maybe it won't happen. Maybe they're going to keep the bubble going and just ignore inflation, just let it run hot. But then that's going to come with some severe consequences for the poor and middle class. So thanks for that super chat, AC19. Here in Melbourne, you must be up late. I'm definitely up late. Here it's about 1:30 in the morning here in Melbourne, Australia. So let's see what else is going up here. So borrowers are now rushing to get the last low mortgage rates, with refinances jumping 18%. So we're seeing the FOMO here. People trying to rush in to refinance their mortgage to get that 30-year fixed rate mortgage. So mortgage applications to refinance a home jumped 18% week to week seasonally adjusted, but it's still 50% lower than a year ago. So yeah, definitely rates were much lower than a year ago. That's probably why. And the average contract interest rate for 30-year fixed mortgages with conforming loan balances of 647,000 less increased to 3.78%. Okay. Well, we got some breaking news here. Let's have a look at this. So the US will move 3,000 troops closer to Ukraine as Russian crisis escalates. That's not good. We just got this in now, guys. This is breaking news. Let's have a read here what's going on. The Pentagon will move some of its Europe-based forces further east and deploy additional US-based troops to Europe as the crisis on Ukraine's border with Russia escalates. So President Joe Biden will send 2,000 troops in the US to Poland and Germany, where they'll join other troops, NBC News reported, citing a senior administration official. Another 1,000 are already in Europe and will be moved to Romania, the official added. So this is definitely not good, and this is definitely another risk, these geopolitical risks that are definitely getting worse. Hopefully nothing too bad comes out of that. But yeah, what we're seeing with mortgage rates, they're now a bit higher than 1% from their lows. I think in March they hit a low of around 2.7%. So what else? Let's go ahead and have a look what's happening in the markets here. Yep, still pretty much the same there. Let's have a look. What are some gainers here? Go by market cap. Okay, so Google. Is this for yesterday or today? Saying up 1.3%. We'll go back to this. We also got some more news here. Let's look at this. Credit cards, car loans, and mortgages about to get pricier and faster, Wall Street says. Sorry, guys, I got something in my throat. Oh, it's really annoying. So Wall Street expects the Fed to raise rates more aggressively in 2020 as it fights historic inflation. And so JP Morgan and Goldman Sachs sees 5 hikes coming this year, while Bank of America is bracing for 7. So what do you think about this? JP Morgan saying 5, Bank of America saying 7. What would you put your money on? The increase will lead to higher rates on everything from loan payments to savings interest. And this couldn't come really a worse time when debt is getting to record levels. So I think credit card balances hit a record of nearly $1 trillion in the US, of around 950 billion. When people's savings rates are going down and when inflation's getting out of control, people are going to have to keep on taking more and more debt just to keep up. And look what banks are doing now. Banks are making it easier to get credit cards. Lenders shunned borrowers with less than perfect credit at the start of the pandemic. Now they're embracing them. So, I think we've seen this story here before, everyone. When banks make it easy to lend, it normally doesn't end well, and it normally ends up creating credit bubbles. Let's have a look here. So an estimated 29 million general purpose credit cards were issued to people with credit scores of 660 and below last year, according to projections from credit reporting firm TransUnion, up from 20 million in 2020 and 26 million in 2019. That is generally the threshold where lenders view consumers as having fair rather than good credit. So even subprime borrowers, a group shunned during the pandemic, are finding it easier to get credit. Not good at all. So people keep asking me to look at PayPal. Let's have a look at PayPal share price. Ooh, geez Louise, 24%. That's not good. Down 24%, geez. No, their earnings were bad. Didn't know it was that bad. That's not good at all. Now it's down 25%. See how low. I have to keep an eye on PayPal. See how low that gets today. Alrighty, what else is going on? So, inflation is permanent and will weigh on the stock market returns for years, says the head of world's largest wealth fund. Okay, what's he saying here? Inflation is permanent and will depress stock market returns for years, the head of the world's largest wealth fund has said. The chief of Norway's 1.3 trillion oil fund told the FT that inflation is rising more and in more places. And he said that stock and bond investors could be set for a long period of low returns. Yeah, I think that's something, we got to potentially prepare for, everyone. Some people on one side of things will say stocks are going to boom. Some, like I say, stocks could crash. But what if we just have, like what some people have been calling a lost decade, where inflation is high, and even though if stocks don't go down in dollar terms, stocks may get you less and less goods and services. Sorry guys, I don't know what's going on with my voice today. I think I've been talking too long because I talked for 20 minutes without being live. Let's see, look at Bitcoin. We got a big fat juicy red candle here on Bitcoin. So it's fallen from 38,300 to 37,800. Let's see what happens here. I wonder if this has anything to do with PayPal. So I think PayPal did have some Bitcoin on their books as well. Okay, so what's some other news here we can talk about? That's pretty much what we've gone over there with inflation. We've gone over what's going on with the NASDAQ, with shares, with Alphabet. there any questions you got for me, guys? Let's see what's going on in the chat. I'll mute my microphone here for a sec. URL for finance news aggregator. So that's just finviz.com. So you type in just finance news and blogs. It should come up. Buy food. Does Elon sell? I think Elon sold all of his PayPal. Buy canned meat. Yeah, well, that's another, I guess you could say unconventional investment. If food prices are going to go up 20% because of inflation like what we're seeing, if you can buy food early or store food, then that's really like a 20% return you're getting on your money. So I like to think of savings and buying things ahead of inflation kind of like a return, just like you would expect in the stock market. Not sure what's going on in Iraq, sorry. Let's see what else you guys are asking in the chat here. I'll have to look into how much of M2 got exported. I'll have to look into that. PayPal lost millions in BTC hack. Is that true? I'll look that up. Okay, this is kind of old news. Lost 851 million lost to scams in 2020, PayPal announces. That's no good. Your account, Coinbase account was hacked and lost 7,000. That's no good. See if it's hit a floor yet, PayPal. Yeah, it's kind of hovering down around 25% now. Wow, glad I sold PayPal yesterday at 168. Yeah, that was lucky. Fertilizer stocks. Yeah, well, fertilizer is going up like crazy at the moment. So if fertilizer keeps going up, then I guess fertilizer stocks will keep going up. What's my thought on what the Fed will do? Well, what we're seeing with the jobs market data today, with losing 300,000 jobs, that's probably going to give them a reason to maybe step back. But what you have to remember is they were already going to stop quantitative easing eventually, even if inflation didn't get out of control. And they were going to lift interest rates eventually, even if inflation wasn't out of control. So just like what happened in 2018, there was no inflation, the economy was strong, and it was time to stop this loose monetary policy. Because remember, 0% interest rates and quantitative easing is meant to be only for, I'll switch back to me here, that's meant to really only be for emergencies. So even if they lift interest rates up to 1%, that's what they're going to do anyways. If they were actually serious about fighting inflation, then they would have done it 6 months ago, and they'll need to lift it to about 3 or 4%. Yeah, high levels of margin debt. Yeah, definitely not good, and that's what can make the sell-off, and that's what I think we saw over January. That's what can make the sell-off worse. And I think margin debt is now starting to slowly trend down. Let's go to trading. Look at natural gas. Let's go to look at some commodities. I see natural gas prices have been spiking. So natural gas, 11%. Geez, and it's up 38% this month. That's US. So we're definitely going to see a gas crisis right when it's about to hit winter. I think I spoke about this yesterday. Texas is going to be facing some big issues here. Coal's also increasing. Coal up 39% this month. So it's going to add more to the inflationary pressure. Propane up 18%. look at the Euro gas prices year over year. 300%, 280% in the UK. What else are you guys asking? Have a look at the chat here. Good morning. Natural gas, UNG. What other commodities moving here? So silver's starting to trend down now, according to Trading Economics. Oh, sorry. I should probably bring the chart up here. It's nearly 2 o'clock in the morning here in Australia. I'm not thinking straight today. So yeah, so as I was talking about, Euro gas prices up 320%, UK 280% year over year. And look at this, the US natural gas up 11% today. It's up 31% just this week, and it's up 39% just this month, and 90% year over year. So this is definitely going to make the inflation crisis much worse. And look at coal, up 150% year over year, and up 39% this month. And I bet you price controls are going to be coming. But with price controls, that only fixes the issue temporarily. And we all know what happens when they lift those price controls. That's when we really see hyperinflation. See if there's any other big moves in commodities. Lithium, 177% year over year. That's a big move. Palm oil up 64%. Milk, 25%. Definitely seeing milk. Look at coffee. All you coffee drinkers, you're going to have to give it up. It's up 93%. I guess that's why Starbucks is getting hit pretty hard. Because coffee prices are up 93%. Cotton up 57%. Oats 107%. Not going to be able to have my porridge in the morning anymore. See, a lot of the industrials are up pretty massively as well. Voice is terrible. I've been speaking too much, guys. Let's see what's happening in the markets now. All the Dows just turned into the negative, down 0.01%. The S&P's starting to downtrend, 0.35%, and the Nasdaq's down 0.47%. So was this the bull trap, everyone? Was this a fake out? Is we going to head back down into the red? You let me know. That's right. Coffee up 93%. Damn, son. Yep. What do you think of paper hand meat breath, Kevin? That was a big flip-flop. And I think what really didn't do him any favors is he kind of made fun of the people that paper-handed before, so now he's kind of getting some of his own karma, because he would tease a lot of the bears, before, and now he's a bear. Or if someone sold before, he would rip them. So it's kind of just maybe, I guess, a bit of karma why he's getting ripped now. And that's what I think about that. Germany is the 4th largest economy and imports 70% of its energy from Russia. Yeah, and that's why I think that's why Germany doesn't really want to get involved, because they're pretty reliant on Russia for energy. So yeah. So stocks, I just normally use CNBC. Commodities, use Trading Economics. Your throat can't handle the holy smokes, that's right. This is Trading Economics. This is all the commodities prices. Inflation, you just use BLS for the US data. Let's see, what else you guys want to talk about? The plunge patrol will be hitting the markets again this afternoon. Yeah, probably. I wonder if that still happens, because remember, during the Great Depression, all the banks did meet together and they did try to prevent a crash. And I wonder if that still happens today. Yep. So yeah, fertilizer. Definitely seeing fertilizer costs going up, and that's hurting a lot of developing countries and third world countries like India. So that means food prices are going to keep going up. Alrighty, I think that's pretty much all the news that I wanted to cover today. See, Bitcoin did drop to around 37,600. Yeah, the markets are slowly trending down now, so we'll see what happens there. All right, everyone, any last questions before I wrap it up? It would have been 55-minute live stream, but I was talking for 20 minutes without it recording, so I apologize for that again. Rice. Let's have a look. What does it say about rice? It's up 16% year over year. But I think it already increased more than that previously. What do you think of the civil unrest in Canada? I just think people are fed up. They've had enough. And hopefully our life will eventually get back to normal. All right, everyone. Well, I think that'll do it for this live stream. Again, apologize for starting 20 minutes late. I was here recording. This was just some of the news that happened today. And I'll be still doing small videos, shorter videos for people that don't have time to watch the full live stream. So again, thanks for watching.